Hey everyone, April 9th, 2023 today. Welcome to another short video from investingsuccess.ca. This is going to be one of the last videos until about the 1st of May. I'm actually pushing away from this desk and going to take a real vacation. And it's been 3 years since I've actually left the country and gone anywhere, thanks to COVID. But anyway, I'm going to get away. So around about May 1, you'll hear back with another video. So don't panic. I haven't left the planet or anything. Earlier today, I had an email from a long-term subscriber to my astrology letter, and he asked me if I could look at live cattle futures. So I thought, yeah, instead of just replying to his email, I thought I need to do another video for YouTube. So how about I make it about live cattle? So you're going to learn a little bit about the meat market and cattle futures. So here we go. There are two cattle future contracts that trade on the Chicago Mercantile Exchange. There are feeder cattle futures and there are live cattle futures. And if you're wondering the difference between those two, let me explain. In the spring of the year, a rancher will see his animals give birth to young calves. And those young calves are basically turned out to pasture, and they graze on grass, and they grow, and they get to around 700-800 pounds after about a year. And those animals are what we call feeder cattle, and the whole feeder cattle futures contract then settles around animals of that size, and that's how the rancher and the feedlot operators that buy them are able to hedge their risks and manage their businesses. Now, the feedlot operators that are buying these 700 or 800 pound animals, they feed them a special diet and they fatten them and they grow them very quickly. That has given rise then to what we call the live cattle futures, because that feedlot operator is selling that fattened animal to a meat processing operation, a packer. And so the live cattle futures allow not only the feedlot operator but also the meat packing house to hedge and manage risk. And then ultimately, from the packing house, that is where your hamburger, your steaks in your grocery store all come from. So that's the complete supply chain. So put yourself now in the position of a rancher or a feedlot operator. Everything is going along fairly well. You're giving birth to young animals in the spring. You're grazing, grassing them. They're growing. You are selling them to a feedlot operator. You're making some money. And the feedlot operator then has to go and buy things like corn and hay and other inputs. Not terribly expensive. He can manage those costs. Feedlot operator then gets a decent price from a meat packing house, and the consumer goes to the grocery store and buys steaks or hamburger, and all is well. Along comes COVID, and for health and safety reasons, a lot of meat processing plants were shut down, not permanently, but they endured phases of shutdown. And I did see it here in Western Canada where I live. Despite the very best health and safety precautions, hand sanitizing, masks, and what have you, it wasn't enough. And apparently in these processing plants, the workers are working very close to one another on the conveyor line. And because of that close proximity, that's where COVID was spread amongst the workers. So now you've got meat processing plants that are shutting down. Feedlot operators don't have anywhere to send their fattened animals. So the feedlots are all backlogged. Now the ranchers don't have anywhere to send their 700-800 pound animals. So now that part of the supply chain is backlogged. And I know, and I've seen it here in Western Canada, this supply chain disruption because of COVID was enough that a lot of ranchers said, we're done. Never again. We've been doing this game for 3-4 decades. We are done. We worked too hard to have some supply chain disruption pull the rug out from under us. And I've seen huge dispersal sales where farm ranch families just sold everything. And they own the land. So now they can take that land and start growing wheat, corn, soybeans. And the beautiful thing about wheat, corn, and soybeans is if there is a supply chain disruption, you put the grain in a bin and you can store it for years. Animals, no, you don't store them. They have to be sent through the entire supply chain from start to finish. And if there's any kinks or disruptions, that is going to be a complete upset to the price. Now, a lot of these ranchers that have thrown their hands up and said never again, that part of the supply chain is permanently disrupted. They're not coming back, okay? Now, put yourself in the shoes of a farmer who grows, let's say, corn, and he specifically sells that corn to feedlots. Well, the cost, thanks to COVID and supply chain disruptions, the cost of whatever chemicals he's using, pesticides, herbicides, that's gone up. And thanks to the ongoing war in the Ukraine, I mean, Belarus was a major potash fertilizer producer. So there's been all sorts of sanctions applied, and that whole supply chain is disrupted. So now you've got anybody growing feed for feedlots, they got to pass those higher costs on to the feedlot operator, who in turn has to pass it on to the packing house, who in turn has to pass it on to the retail consumer in the grocery store. Add to that the drought over the past several summers, that hasn't helped either. And so on your recent trips to the grocery store, if you've noticed that you think the price of beef has gone up, oh yeah, it has. Now you know why. Oh, and did I mention that the entire beef trade, if you will, in North America is controlled by 4 major corporations: Cargill, JBS, Tyson, and a company called National Beef Packing. So 4 guys run the show. The show has been disrupted, kinked, turned on its head because of COVID. Yeah, you can easily see why prices for beef at the store are where they're at. But I think the consumer is getting to the point where enough is enough. There's chicken. There's other meats that we can eat. And I think we're at pretty close to a tipping point here where the consumer is going to have the final say. So here's a chart that really shows the entire picture, 2014 through current time. So 2014, everything is fine. Price of cattle reached a peak, but it started to come down. It started to normalize. Yes, COVID, certainly knocked the wind out of it in 2020. But look at what has happened since COVID. In literally 2 years and a bit, we have retraced what took over 5 years of declines to deliver. So yeah, we've had this sharp snapback. We're almost like within a penny of a 100% retracement of the 2014 through 2020 decline. Now, is it possible for markets to go more than a 100% retracement? I'm going to show you in a little bit that yes, it is possible. But once you get to that 100% retracement, the odds of the market pressing even higher, those odds tend to diminish. So we're getting very, very close here to a turning point, I think, on cattle futures. Now, live cattle futures themselves started trading for the first time on November 30th, 1964. Back in those days, the people who administered the creation of these contracts and saw to it that they started trading on the exchange floor, whoever these guys were, they were well steeped in astrology. And I've seen this time and again, especially on these older commodity first trade horoscopes. So, classic example, live cattle futures. You've got the ascendant at 27 of Sagittarius. You got Saturn at 29 of Aquarius. You got the node at 23 Gemini. And you got the moon at 0 degrees of Scorpio. Now, wait for several days, and the moon is going to move. So this whole pattern breaks down. So that's why they had to pick November 30th. And they wanted that pattern in there. That's called a kite pattern. It's very rare, but I do see it every now and again. So now what I look for with regards to that kite pattern is in the scope of a month, the moon is going to pass through all 12 signs of the zodiac wheel. So in a month, in a 29-day lunar cycle, the moon is going to variously touch all of those corner points. And also, you've got Mercury, which is a fairly quick mover. It goes around the zodiac wheel in 130 odd days. So it too is going to touch or pass each of those corner points. Venus is going to do likewise. Slower moving planet like Mercury, it will eventually work its way around, but it takes several years. But if it touches one of those corner points, it can cause a reaction in price. But mainly it's the moon. And so then on a price chart, I'm looking to see what happens as moon passes these kite corner points. So if you have this chart, and if you have a table of ephemeral planetary data, you can actually see and you can start making a list of when the moon is going to pass these corner points. And you can have that list on your desk beside you, and you can then start to anticipate that, okay, on such and such a date, the moon is going to pass this corner point. There could very well be a slight change of trend on the stock or commodity that I'm looking at. Now let's dig a little bit deeper here. I want to show you just a quick example of what I'm talking about. And let's go back to January of 2020. Cattle prices had been going up. They reached a peak and they started to come down. Why did they peak? You had moon passing natal node, but you had Mars slowly grinding its way past the natal sun location in that 1964 horoscope. That was the trigger point. It turned everything on its head and it started price going down. And then, of course, COVID came along and the bottom literally dropped out of the market. But notice that in March of 2020, the cattle market tried in vain to recover. It couldn't press much higher than $110 per hundredweight. Why? You had Moon and Mercury both going past the Saturn point, which is one of the corner points of that kite pattern. And eventually in April of 2020, you had Moon passing the natal Jupiter point, and that was enough then to halt the downtrend. Price started to recover, ran out of momentum at just a little over $100 per hundredweight. Why did it run out of momentum? You had Moon, Mercury, and Venus all within a couple or 3 days passing that natal node position in the horoscope. So that acted as a barrier. Okay, let's flip ahead a little bit more here. Now, when I analyze any stock chart, I will certainly lay out the astrology that align to these swing highs and these swing lows. And then I look at the magnitude of some of the price moves between these highs and lows. So here's an example from 2021 to the current time. Swing low in May of 21, let's call it A. Then there was a swing high in, let's say, February of 22. We're going to call that B. And then the price pulled back into about June of 22, and we're going to call that C. So we've got this ABC. Now, familiarize yourself with the Fibonacci sequence, and you can read about that on some of my other written material, on some of my, even on these YouTube blogs. The Fibonacci sequence gives way to a number called 1.618. That's what the Greeks called the golden mean. Do some clever math with 1.618. Take the square root of it, and then take the inverse of that square root value. That's going to give you a number 0.786. Take that inverse square root number, raise that to the power 2. That's going to give you 0.618. Raise it to the power 3. That's going to give you 0.486. Raise it to the power 4. That's going to give you 0.382. Raise it to the power 6. That's going to give you 0.236. That's what traders call Fibonacci retracements, and they normally display them as percentages. So 23.6%, 38.2%, 48.6%, 61.8%, 78.6%, and yes, the 100% is part of all of that. So from B through C on this chart, how much was that decline? It was 38.2% of the move from A through B. Now, you wouldn't necessarily know that just in glancing at the chart. You've actually got to, do some figuring and measuring. But I see these Fibonacci retracements on practically every price chart that I look at. And they don't always immediately stand out. You got to go looking for them, but they are there. Now, the other thing that Fibonacci math gives us is what we call Fibonacci extensions. And so in keeping with these numbers, there will be such a thing as a 1.23 extension, a 1.38 extension, a 1.48, a 1.618, and possibly a 1.786 extension. So from point C, we actually went, and this line here is a 100% retracement of A through B, but you can see that price moved beyond that. It curled over and it went down a bit, but then it started to go up. So we've actually gone more than 100%. Would you believe here and now this amount of move C through D is a 1.23 times extension of the move from A through B? Fibonacci, it's there. It is there. Oh, and why am I so passionate about Fibonacci? Many people don't know this. The planets in our cosmos, the spatial distribution, if you look at their distances from the sun, that spatial distribution is in complete alignment to the Fibonacci sequence. Now you know why I get so passionate about this mathematics, and that's why I write the astrology almanacs every year and write these newsletters. It's just math, and the vast majority of people don't get it. They're busy listening to analysts on TV, and they just don't understand that it's all math. As above, so below. If the planets in the cosmos are laid out according to Fibonacci, yeah, of course, you're going to see Fibonacci on a price chart, because these prices, these movements are just human emotion, buyers and sellers, and we're influenced by the planets, most notably the moon. And that's why I say the moon passing the corner points on one of these natal horoscopes is the most important thing to look for. All right, let's move on. So 1.23 times extension. If we're going to go further, as I said, we're very close to a 100% retracement of the 2014 through 2020 decline. I have no doubt we're going to get there. Could we push beyond that? Yes. And if we do, we are probably next going to be looking at a 1.386 times extension of the A through B move. That would take you to the $175 per hundredweight level on cattle. Could you go beyond 1.386? Yeah, but your odds are getting slimmer all the time. So that's why I say we are close, I think, to a pullback. We're close. And I just want to show you here, most recently, this little pullback here in March. You had Moon passing the natal node, Mercury passing the natal Saturn. Price tried to decline, but it got halted. Why? Saturn was parked at the natal Saturn point, and it basically said, nope, you're not going to decay or deteriorate any further. You're going to go, if anything, you're going to go higher. You had Mars also parked at the natal node. You had Moon passing the natal ascendant. So there's a couple heavy-duty cosmic events that halted the price from further erosion and pushed it up. So yeah, look for, certainly the 171. That would be the exact 100% retracement. If it goes beyond that, look for the 175 level. And beyond that, oh, your odds are getting real slim, real slim. Now, the other thing that I always do, I always overlay one of my charts with a trend following indicator. One of my favorites is the True Strength Index. And I just want to show you something very quickly here. In October, November 2021 into March of 22, price was going up, but the trend indicator, it was showing a downward movement. That's what we call negative divergence. So when you see the trend indicator displaying negative divergence, that is usually a sign that you're going to have a peak at some point. And yes, there would have been an astrology type event here at point B, the peak. So pay attention then to whatever trend indicator and be alert for these negative divergences. Okay. So here and now, the trend indicator is saying that the trend on live cattle futures is bullish. The black line is above the red line. And what I'm going to be looking for, if we push a little bit higher here, I'm going to be looking to see, does this trend indicator roll over? And if it rolls over, that will give me negative divergence in the context of a rising market. That's going to tell me that a peak is imminently close. Okay, so that's what I'm looking for. Now, let's flip ahead here one more. Okay, also in the context of live cattle, and as I said, the people growing corn to sell to these feedlots. Yes, the price of corn definitely has come down from its shock when the war in Ukraine broke out. However, we are starting to form a wedge pattern here, and wedge patterns have to resolve themselves one way or the other. There's a lot of speculation that the spring seeding in the Ukraine is going to be disrupted by the war, and Ukraine is a big producer of corn. And if its corn cannot make it to market, or if it can't even get planted to begin with, that's going to put some pressure on North American corn prices, which in turn are going to put some pressure on the prices that feedlots have to pay to get the corn. They got to pass it on to the packing house, who has to pass it on to you, the consumer. And as I said, I am pretty certain that that consumer is to the point where enough is enough, and they're just not going to keep paying these ever increasing prices of hamburger and steak at the grocery store. So if the price of corn goes up, that is going to be, in addition to the Fibonacci math and the astrology and the extensions, rising corn prices will be the kiss of death for cattle futures prices. So you got to watch that as well. All right. That's enough. Financial Astrology Almanac. Yep. If you haven't got it, get it. Lots of stuff in there. Having a lot of fun with my various letters. Subscribers are coming at me from all corners of the world. I just recently, last week, put a course out on a platform called Udemy. And the course is called As Above, So Below. And it takes you into the planetary distribution in our cosmos that follows the Fibonacci sequence. It takes you into the Fibonacci sequence math, the retracements, the extensions, and then I do a whole bunch of case studies where I just show you how basic astrology of moon passing key points in a horoscope, I show you how those transit passages quite often align to trend changes, and the trend changes quite often align to Fibonacci retracements or extensions. And I just keep hammering on this notion, as above, so below. And I use this Udemy course to get people to look at these charts in a very different light and to really understand that any price chart is just math. and it's Fibonacci math, and it's astrology math. Also, in the past little bit, now you know why I need a holiday. I've been working too hard. I came out with a new book. It's called Follow the Trend. One thing I've noticed in consulting with people on astrology is a lot of people do not recognize the expression, the trend. They don't know what it is, and they don't know how to identify it. They don't know what to do. When I think back to my days as a broker, my branch manager practically every third day was reminding me, follow the trend, follow the trend, follow the trend. And in the book, I go through things like moving averages, Fibonacci math. I talk about all of the various trend oscillators, indicators. I show you by way of example which ones I think work, which ones don't. And I try to encourage you to start following the trend. I deliberately do not talk about astrology in here. That'll be for the next book. But I think Follow the Trend. It's a $20 book on Amazon. I think it probably deserves a space on your bookshelf. It's a good reference book. And as I said, I like to use the True Strength Indicator, but there are others that are equally as good. All right, that's it for me. I need a holiday, guys, and you're going to hear from me again sometime after May 1. So best of luck trading. Good luck with the markets. Now you understand cattle, and the next time you're barbecuing a steak or making a hamburger, you can think back to this little YouTube video, and who knows, maybe you'll even want to try trading some cattle futures or some corn futures on the markets. Anyway, have a wonderful next few weeks, and I look forward to reconnecting with you then around about May the 1st. Cheers.